for a bit of lateness today because this morning I have a very nice conversation with a very old friend of mine, and I invited him to join us today. So that's why I was a bit late by a few more minutes. Okay, but nonetheless, welcome to our Trade with the Boys morning MAO. Today is Friday. Yes, today is Friday, and I'm actually now live going to share with you some great stuff. Now, today's market analysis will be a bit longer than usual because there's a lot of great things to share with you. So guys, just stay tuned, okay? All right, let's start this morning MAO right now. Okay, let me just put on my screen and we share and we go. All right. Okay, guys. Now today is the 26th of March, 2021. Today, the caption for this morning will be "Run Road," okay, or "Stay On." All right, I think "Run Road" basically is more colloquial, right? It's more for the in the Chinese saying is "Pao Lu," or the Hokkien is "Zhao Lo," right? Basically means that it's time to pack up your bags and start to run away from the market, or are we supposed to stay on? All right. So I will tell you this, my friends, the key will be the 10-year yields. I know that recently now no one talk about 10 years anymore because apparently it have came off, right? And I told you guys it will happen like this. Last week, MAO, I already said that, right? The yields will come down because this Jerome Powell is going to be speaking. Janet Yellen will be talking. So obviously they will make sure, okay, the yield control is there. Even though they say that they won't do it, right, but it's very clear they will do that, and it's really happening right now. And I did tell you guys after Wednesday, which is Thursday, I told you guys that it will start to go up. And I said that right on the 2 days ago MAO, and I said that right on by Wednesday when it finished, Thursday onwards, the yield will start to go up. And prior to that itself, on Sunday, I also mentioned that, right, the US dollar will strengthen. Right, I said all those things, and I did tell you guys that the US dollar strengthened, the gold will come down, and it all really happened. Okay, so if let's say you guys remember what I just said earlier itself, right, and you know that what I say is true, please key this word KEL, K-E-L, into the group chat right now, okay? Just to make me happy a little bit, and I can share with you more stuff, okay? Right, thanks guys. If you remember, if you validated that I say all those stuff, and you know that what have already happened really happened. So just put the word Cal, at least you make me feel happy a little bit. All right. Yeah, thank you guys. Thank you, Carl. Thank you, Richard. Thank you, Brian, Rita, Philip, Fred, Anthony. All right, really appreciate that. This is how you make yourself happy. All right, but at least the main thing is this is all going according to what we say. All right, thank you guys. Thank you. Chong Ming, King Hua, Eileen, Jimmy, Colleen, Han Yu. All right, because I want to share with my friend who just is probably going to join us soon to let him know that, right, previously I was pretty okay. I'm still pretty okay right now. System. Right. Okay, hold on. Let me just get myself ready onto. Give me a minute. Hold on. All right. A bit hot today. Stuffy. All right. Get my wife to help me then. All right, guys. Thank you so much. Okay, let's continue. Now, yesterday when I talked about Elon Musk itself, right, 6 a.m. in the morning. Yesterday my MAO was 6 a.m. right. I think somebody shocked you guys, okay? Because yesterday I need to go to the ICA to take care to basically help my wife do her extension. So what happened was pretty simple. It was like basically I did an MAO right early in the morning, and of course. I talked about Tesla. I told that I shared that Tesla share will be going down further, but I did mention that about 610 level you can buy back some position. So the thing is this: you must understand nowadays there's a lot of people still going to buy Tesla, and yesterday Tesla share did rebound after hitting 610, exactly the level I mentioned. All right, but the thing is this: will this mean that the Tesla share is bottom? Well, I will not want you to think that way. Let me bring the chart right now for you guys. Moment now. Let me bring you Tesla chain right now. Tesla. Okay, this is Tesla share right now. Okay, your day chart. Now look at the day chart itself, right? Well, the thing is this, the good part is that yesterday that indeed funds came in to buy. That's why the KSI turned green yesterday. So today there will be some more buying expected to come later today. All right, but the thing is this, overall itself, right? You look at Tesla. Tesla have came down from about 900 level all the way to current price. So in short itself, right? Okay, the momentum is still on the downside. And it seems to be that every rally is right, the boys are actually taking the advantage to short the market instead. So all I can say is this, for Tesla share, I just give you a quick one today. You take this recent rally here. Sorry, we take that first. Okay, this is the recent sell down. You can see that the market missed the 50% I mentioned then, and then it came back down, right? So this is the very first thing to tell you that the market is pretty bearish for this counter. Then if you look at the recent rally, right, you can see that it went down to the 61.8, almost there, and then rebounded a little bit yesterday. So I suspect that Tesla share will test the 61.8 level, and that is roughly about 605, okay, or 606 to be precise. So Tesla share should trade about 606 before we can see any rebound from here. But of course, if the market loses 606, right, then obviously I'm looking it back down to 550 level. Okay, 550. So that's why this little cartoon here itself shows that, right, people just love Elon Musk and they just keep on buying Tesla just because of faith. And then who cares profit, right? And everybody aiming $1,000. Now it's 3,000 by Kelly Woods, all right? So all I can tell you this, just be careful, all right? Just be very, very careful. Oops. Okay, there's an animation at the back here. I forgot to do that. Let me just give you a short one. Give me a moment, so you can see if understanding. Hold on. Okay, done. Okay, so this is a little cartoon. Every morning I try to do a cartoon with all of you to make things a bit livelier. So what is a stock market? What is a stock market bubble? Now, I've been asked this many times, and people are asking me, Kel, is there a bubble ongoing? Now, I keep on saying that, right? This bubble is only going to happen when everybody is on one side of the camp. And apparently, it's all right. I think we are. All right. I'll explain this more later towards the end of the MAO, whereby I go into alternative sharing. Then, of course, you can hang on and wait for that particular slide to prove to you that we are actually all on one side of the camp. So basically, it's all right. When everybody is on one side of the camp, the opposite will happen. Why? Because it's very simple transactional activity between the buyer and the seller. All right. So if there's a lot of buyers, means there's a lot of sellers at the same time. So that's why now you can see this bubble here, Mr. Bubble. All right. It's basically lying perfectly on this bed of sharp points, taunts. But basically, right, right, if let's say now you will put your hand onto this bed of taunts, anyway, you won't get hurt because it's the surface, the flat surface. So actually, theoretically, the bubble will not break, not burst in this case. But as long as something really happened, a sudden impact comes in, yes, then what will happen is, for example, you suddenly just push more to the right side or left side of your hand, then obviously it's already going to bleed. So same thing for this. At the moment now, there's no catalyst that's going to prick this bubble yet, but it's undeniable this bubble is really there. So that's why I tell people this: if you're a long position, start to clear and just prepare yourself. Now, I'm very certain to tell you that, right, in the next 2 months or so, we're going to see very big turbulence in the market. I'm very, very confident of that, okay? And if you're following me in MAO, you will know that yourself. So before we start this morning, I'd like to motivate one another. All right, do less with more focus. That's why focus more. No point you become a jack of everything. Try to focus on the market and you like it and you stick with it. So like example, M Trader, right? She makes her millions because she focused on, doing certain thing. All right, that's why she's making money. And of course, luck exists. Well, luck exists, but it doesn't really equate to your eventual outcome. End of the day is that your hard work really does it. Okay, so that's why to me, if you tell me you're bad luck in trading, I always have to challenge this. Come and talk to me, and we sit together and trade. Because if you really such a bad luck in trading, then obviously it's all right. You're the best trader in the world. Because as long as you buy, I sell 10 times. If I make profit, I give it to you. Isn't that better? So guys, I don't think so. Right? Luck is really not the main G's of success in trading. Okay. So before we start this morning, once again, please understand disclaimer as usual. Before you enter the market based on my views. Yesterday, I think that when at 6 a.m. when I give you my Hang Seng call, And I think Uncle Arun was very impressed because I gave him exactly the level that I think the Hang Seng will rebound, and Hang Seng really rebounded exactly at that pinpoint level. So that's why I really hope you guys are making good money, and make sure that you do check your current financial condition. Huh? Okay, now let's go to the global news first. Global news. Number one news. Bitcoin traders, today you need to be on standby because there'll be a record $6 billion worth of options going to expire today. All right, I'm not too sure what time would that be. If anybody know what time would that be, let me know. Okay, I think about 11 or 12 p.m. if I'm not wrong. So the thing is 6 billion worth because that is at a strike price of 44,000. Okay, so that is whereby the market is basically thinking that maybe there's a possibility that the market, the boys, the whales, will try to push it down to about $44,000 so that they can have the option expire without much losses. So that is what they call is inflicting pain into the buyers. So that's why yesterday when the Bitcoin came down from 56,000 up to 50,000, I mentioned that in the chart. I said that Bitcoin will likely hit 50,000, and it really happened. Okay, it really happened. So that's why you see all this thing itself. If you actually follow the daily MAO, right, it is really possible to know where can you make some money off it. And of course, now the market is going to look at it. If let's say after today all looks good, well, that means that the market will recover. Well, there's a high possibility. That's why I say, guys, those who are in Bitcoin with me and those who are having the indicator for cryptocurrency, right? You need to stay on, because I can tell you this: the next 2 months, 6 weeks to 8 weeks, right? I'm going to see a lot of great stuff happening on Bitcoin. You really don't want to miss this run, okay? So for those attending tomorrow's session, okay, tomorrow I have this big cryptocurrency workshop. You're going to love it. You're going to get first-hand information from me to tell you exactly what to do. So you look at our indicator yesterday. Look at it, how brilliant it is. It was at 53,000 when the Bitcoin slammed down all the way. Now, a lot of traditional indicators ask you to buy here, buy this point, right? You don't do that. You don't do that. You just have to follow the system. So the system is very simple, as you guys already know what to do, right? You just have to follow the system. So the first thing is that it became red. I mean, basically it was red bar here, but the KCX indicator was green, so you couldn't buy yet. You had to wait for the color to change over. And of course, you can see this is a BNB, right? This is a BNB followed by a color change, and that's it. That was an absolute low of the Bitcoin on the day itself. And after that, Bitcoin rally up all the way by $2,000, guys. You just have to follow the rules. Basically, you look for the KCX first, then after that, you look at the color change, and that's it. It's good to go, all right? So this is very important, guys. Our system worked, even though yesterday was a very tough day, but our traders make money. That is most important. All right, so the thing is this, on the for tomorrow, we only left 3 seats left, okay? And on the 3rd of April, we left 20 because it's still a week now, so likely there'll be more people still thinking through. But nonetheless, right, tomorrow it will be a real scream, okay? You're really gonna enjoy this because I'm going to give you this, a very special seasonal chart pattern that it will likely yield you high ROIs. I'm not kidding, guys. You know that I don't do such thing. I don't do funny gimmicks like give me 35 seconds and stuff like that. I don't give you those things that tell you that, can definitely guarantee you high return. I don't do that. But if I actually do that, that means that, right, I got great confidence that what likely will happen is going to happen. So that's why this morning itself, I asked you, whether did I tell you about the 10-year yields? Did I tell you about the US dollars? Because this is macro view. Macro view is much harder to dictate because end of the day, it's like not only you know the direction, you must know the date. Then you make a lot of sense. And of course, I seemingly managed to do that. So guys, I'm not kidding you. If you really have time tomorrow for $50 only, it's not even enough to cover the hotel costs, okay? But I just want you to come. I want you to hear it live from me to tell you exactly what to do for the coming 4 to 8 weeks, okay? So contact us on Facebook, okay? Then that is where we will be able to assist you, okay? Anyway, I already give you my point. I give you the hint. If you're still procrastinating or waiting, I'll leave it there, okay? But for those people who are coming, or those people who trust what I just said, stand by some capital. You will need capital for this ride. But once you get it right itself, right, this money going to be fantastic for all of you, okay? All right, so Now the thing is this, why am I into all this sharing and stuff like that? Because you understand this. Jerome Powell praises the economic recovery and sees Federal pulling back help after substantial progress. Now, is this this praise? Is more like to to tank the market, or is it a hint? So I would like to tell you this is a hint. It's a very big hint. Although the market see is that okay anyway, it's good to go. That's why they are buying up, right? But it's very clear that Jerome Powell is telling you it's just a matter of time. We are going to stop. A matter of time, the tapering will come in. So that's why I want you guys to really be very careful. It's time to reel in, okay? It's just like a fisherman. You go to the sea, you have fish, a lot of fishes, and you know that, right? The thunderstorm is coming. Now, the thing is this, okay? Some people will say, it doesn't matter. I wait for the thunderstorm to come right in front of me, rains, then I leave. Some people like me, I will see that, okay, from far, I see the thunderstorm is coming. I may miss, maybe the thunderstorm may move away later, but why take the risk? So why don't just exit first? From now, anyway, I caught enough, right? I can go for a bit more, but what's the point? So that's the reason why am I telling you guys is that you must take note of a lot of stuff that's ongoing right now in front of you, okay? But again, it's an individual choice. So that's why Jerome Powell, when he speak last night, right, straight away the market reacted, right? The Dow Jones came down by 200 points after that. But of course, at the bottom itself, right, you can see the shore of buying came in. It's very typical. It's very typical that they will come in to buy heavily to just maintain the market. And you can see that, right? So that's why now there's ongoing rumors saying that is this actually a bear trap, not a bull trap, but a bear trap. So it's a good idea to think of that, but I can tell you this, that's what usually a bubble will have. The bubble will always have this thing that the market has a bear trap, and then after that it's all right, everybody thinks that okay, things coast is clear, let's buy, and that is where things get scary. You know why? Because look at this term. This is the global yield. Look at it. This is the sovereign bond curve, and look at it. Oh my god, everyone from Japan, UK, Germany, Australia, New Zealand, all of them is increasing. The fastest one is Australia. You see, the yield in Australia is going up very fast, followed by USA, of course. Then after that, followed by UK. The slower one is Japan, and this one is Germany. But still, these 5 big countries, their yields is going up. So this basically tells you very clearly that there is a problem, and it's a global movement. All right, it's not just only USA. So that's why you don't see people talking about this, right? I know many trainers just talk about 10-year yields and that's it. Let's move on. I emphasize a lot because macro views serve a big purpose for long-term chart movement. Okay. Of course, Jim Cramer now comes in and says that, hey, you know what? Come on, man. It's okay. Just ignore, because this policy is good for buying. So Jim Cramer came in and says that, right, okay, don't worry. Don't take that. You should take the hint the right way. He said that, right, basically Federal Reserve is basically saying, party on industrials, okay, which causes the hedge fund to buy them hand over fist, okay? But usually when that happens, it's all right, they have to sell something away. That's why the high growth tech stock were the sacrifice. Okay, well, I buy him to this. That's why you saw the Nasdaq coming down. But you tell me now it's a good time to buy stocks. I really don't think so, in my opinion. Of course, we have the Tom Lee, the analysts calling for that, and Jim Cramer calling for this. These guys are way ahead of me in terms of financial experience. But my personal take is no. Look at the 10 years. If the 10-year yields today goes up, then I'm telling you this, next week will go even higher. All right, next week will go even higher. So let me bring it now to you guys. This is the US dollar first. Now the US dollar today is at 92.82 standing now. Okay, it's basically it's moving slightly higher. Okay, higher than yesterday. That is the 10-year. This is the US dollar. I suspect the US dollar today will breach past 93. Okay, I say that again. I suspect only that the US dollar index will breach past 93 level. Okay, the 10-year yields, let's bring it in. The 10-year yields right now, let's bring it in. Okay, hold on a minute. Moving the chart around. Okay, can you see that? The 10-year yields now is now trading at about this price now at 1.628, right? But you look carefully, the 10-year yields are, guys, look at it carefully. You can see that you can see that, right? Yesterday, exactly at what are you, Thursday, Right, after that, it did a double bottom on Wednesday and Thursday at over 1.597. I mean, go below 1.6. And then after that, it climbed all the way up to 1.627. Okay, though this is very clear that this 2 point is whereby Yellen and Jerome Powell speaks finish. This is the next day, the so-called aftermath, and now it's trading higher. So I'm going to tell you this, guys. The moment the yields have to go climb at 1.655, it will move the market. And we cross 1.7, I can tell you this, the Nasdaq will come off pretty fast, okay? So that's why I'm saying this, guys, for tech stocks like Tesla, I'm very careful. So I'm basically, every higher level, I've been asking people to short the market, and we're making $30 each time. Now, every time it rebound, we don't care. We wait for it to go higher, we short it down again. So that is what we are doing right now with basically risk control, all right? This is very, very important. Okay, so now the thing is this, but at the same time, UBS says that, right, stock at 5 to 10%. Now you realize that now everyone from Goldman Sachs to UBS to Deutsche Bank, everybody is calling for buy. It's as if that if you don't buy, you're an idiot. Well, I would put it this way, if they are so optimistic, then they should be buying. Then the question is, are they? That's my point, are they? So they're saying that, right, because of that, there will be another 5 to 10%. Wow, that means that the Dow Jones Chart is 32,000 plus. So another 10% is another 3,000 points. Wow, that's a lot of money. One contract will yield $30,000. So these guys should be buying a lot, right, to become a multi-billionaire. So I will just say this, guys, when these guys, the boys, are telling you to do something itself, right? And while at the same time, they're telling you that they know that the yield might be going higher, I cannot understand their point now. Seriously, you're telling me that the yield is going to go higher, but the stock market is a buy. Okay, because you think that because the economy is recovering, it's a buy. So why would you worry back then itself, telling people not to buy? Okay, so you see, my point is this, they are basically twisting your mind, making you confused. But at the end of the day, you must ask yourself this, when costs increase, what will happen to earnings? That is very important thing. And that's the thing that is the earnings still there, okay? So you will know that, right, it might make sense that it's not there. So now you can see that this is an extended sharing of you guys. You can see very beautiful, the comparison between the US dollar and the US 10-year treasury yields. You can see that, right, recently the dollar goes up, but the yield came off. Why? Because the dollar reflects the demand of the currency. And why there's a demand for it? I thought that 1.9 trillion in the market, it should be deflating it, right? No, because I've been telling you this. If let's say, right, there's any problem itself, right, the dollar will be in demand. The dollar will be in demand. Hence, therefore, all right, if the dollar is increasing, that is actually a very clear indication, right? The yields are now being manipulated because usually the yields and the dollar goes up together. So now you can see the yields coming down on its own. It's because there's some manipulation. But once the manipulation is over, that's it. The yields will run up very fast. Okay, mark my word, today, 26th of March, I'm telling you this, the yield will go up very fast. Unless I'm wrong, because someone bigger than me managed to do the yield curve control, okay? So watch out for that. Now, the thing is this, yesterday, one of the reasons why the banks were happy because Federal Reserve finally gave a date. Now, the market has been asking what day can we buy back our shares, and been asking. And of course, now the official date is on the 30th of June, whereby you can do buybacks, you can do bigger dividend and stuff like that. So the question is this, why 30th of June? Well, it's 3 months from now. I think that there's a rational reason why. You can understand that. A lot of things happen for a reason. That's why I'm telling you this month of April, month of May, to be very, very careful. All right, there's a lot of things that when the Federal Reserve make a decision, right, it's just not like that. There's another good reason for this. So that's why I'm telling you this, guys. Coming April, coming May, please be careful. I know this is my third time saying this, and I know what I'm saying, and I don't know why am I saying this. I'm just telling you, be very, very careful, because like Treasury Secretary Janet Yellen, she is definitely a dovish person. She's definitely very happy with shares buyback. So that's why, all this thing tells you that coming June, just to take note of the market, okay? All right, so you can see that the bank share rises after hours, okay, where Wells Fargo, JP Morgan, Chase all went up, right? Right? But the thing is that if you cannot hold on, that means there's something wrong with the whole entire reading of this, okay? And of course, this is going to be a joke here itself, around the 1.9 trillion stimulus checks are out, right? As you know, I mean, about 450 billion is out to the Americans. So, but JP Morgan says that, right, apparently there's no bounce in retail trades despite the new 1,004 steamy checks. Now, when it was only 600 to 800, right, what happened? Wow, the stock market reacted, right? But let me ask a question, okay? Let me be very honest with you, okay, guys? Look at it. If let's say we're talking about the stimulus check, $600 check, and then you are telling me because of the check, the stock market goes up, I really cannot figure it out properly. You know, put it this way. I mean, $600 can buy some stocks, but how much? Buy options, okay, maybe you can have a 10 to 20 leverage, but end of the day, my point is this, okay, is that, okay, not everybody will take the checks and go and speculate in the stock market, right? But the stock market took this idea and started to push the market higher, and this causes everybody to buy shares at the high. And what happened after that? You know, the last 2 weeks is right. Look at all the stock forums. Everybody is licking their wounds, okay? Losses is piling up. So obviously, losses is piling up itself, right? You can see very clearly the first round when the stimulus check was available and the market was running up itself, you can see that the mid cap was running way faster than the large caps. So this tells you the retails were in. But now look at it much now. Look at it. The retails, the buying is much muted compared to back in January. And even large caps also coming down. That means that, right, the boys also not buying. So basically, it's all right. What is actually really happening? Right, what is really happening? It's very clear that the boys are basically, you know, wanting the retailer to pay off their debts. Okay, the thing is this: the retailer want them to pay off their debts itself because there's so much losses ongoing. Okay, in fact, right, and you can see now, right, the option retail market shares as in total now has dipped down quite a fair bit. Look at it. Look at the curve. Okay, this is I draw it in myself, the curve. You can see that now the curve is coming down, and of course that's the reason why. So of course there's some speculation why the money never goes in the market. Of course, I just saw one very corny joke about where the money spent, but I don't think it's nice to share in the morning. Okay, so in short, it's how you went to some vices. That's all I can say. Okay, all right. So maybe this is a real reason. Let me give you my set of reason. You see, probably the husbands and the boyfriends collected the checks and then they went to dabble in the stock market. Now initially they make money, right? But unfortunately, last 2 weeks the market came down so rapidly, so they might have lost the money. So of course now the new checks come in. Obviously the ladies are not going to be happy with that, right? So probably this have happened. Probably, in my opinion, is all right. The ladies are saying, look, what have you done to our money? You better stop doing this as well. No more. Got the idea? How many think that this is actually the real answer? Okay. All right. So this is why this is just a joke. I don't know whether it's true or false, but even me in the 20s in the market itself, right, I believe that it's going to have some slice of it. Okay. So pretty cool, right? This cartoon. Actually, it's a part of the cartoon. I just felt that this really speaks all. Okay. All right. What do you all think? Okay. What do you all think? Okay. So let's continue on. Yes. Okay, all right. So let's cover what happened last night in the US stock market. Okay, last night US stock market initially came down first, as you can see. Then after that, nowhere itself, the market started to rally up all the way, breached the yesterday's closing and continue and rally. Now with the market rally so much on the bottom, right, it's very clear at the back end, a lot of short squeeze have happened. And those who shorted the market, right, was squeezed out in the last 1.5 hours with 200 points again. But the question is this: if this short squeeze, is it real? So I'm going to say out loud here itself, if the Dow Jones do continue to go up, right, yes, maybe the buying is really true. But if the market really pulls back later on below the 32,400, right, that means the short squeeze is just only a push up. Then traders, you need to watch 32,400 level. Okay, so let's go through the fundamentals of what happened yesterday. Dow Jones climbed 199 points in late day rebound, led by stocks benefiting from a reopening. Again, the question is, I'm getting very confused with this. Is the market are you going to reopen anyway? Seriously? I mean, we have this Dr. Fauci say no. CDC say no. But apparently it's all right. The US seems to not to care about this. So it seems that right now, again, they rotated play. 2 days ago, they tell you that there's going to no reopening. That's why they sold down the airline share. They sold down the cruise. Then today, they tell you that, okay, going to reopen again. They bought back the airline shares. They buy back the cruise. It's really It really is a joke, lah. I can tell you this. I mean, this is how the boys manipulate the market. They want to buy something, they tell you this story. They want to do something, they buy another story. But the thing is this, if you step out of this and watch this again, you will know that, right, the problem is they're trying to lie about it. It's just a matter of time. Because end of the day, people are still falling sick. People are still perishing from this unfortunate COVID-19. End of the day is the yields is still going to steepen again. And it's global now. So this whole thing tells me that, right, even though we had the Labor Department saying that, right, the unemployment insurance has came down a bit, but it's still much, much higher as compared to 1 year ago. So now they're telling you that the strength of the jobless claim actually means that the broader market is doing better. I really cannot see that. You're looking at 684,000 people, not 68,000. Now previously was 68, about 200,000. This is triple of the last year numbers, and yet you're telling me that the recovery is there. So all I can tell you is this, guys. I'm not going to say that I'm better than them. I'm just telling you that basically now everything looks good. Everything's back to normal again. The boys are saying, let's buy shares and you should be doing good. Now, I will say this upfront. Buy shares can. Buy those that's going up, fine. Those who are on the way down, that means that you can see from 5-step drop, came down from 5-step up by 3 steps, 3-step drop by 5-step, 5-step up by 4-step, that type of is downtrend. And that means downtrend, that means that you don't look to buy, you look to short at the high of every rally. Okay, that is a very important thing, okay? All right, so let's just recap of what happened yesterday on the Dow Jones. So yesterday, the Dow Jones opening price was between the two pivot 1 and pivot 2. Now with the KSI being green in color, that means the boys are buying, right? So obviously the market, when it comes down to KTR -1, -2 to -3, it will be an opportunity to buy instead. Okay, remember that. Rules are rules, macros, macro. This is something that you must differentiate. So obviously, initially, the market went down below pivot 2. Now, below pivot 2 is obviously the sell ready. That's why the Dow Jones came down pretty fast. But as you know, if the market goes above the P2, that means that the market has bottomed out and you have to go for the buy because the KSI was green in color. And of course, there is a very important KCB level at 32,378, a level I keep on reminding you guys, if the market goes above it itself, right, that means the market got support. And of course, truth be told, when the market crossed the pivot 1, is above OP, is above pivot 1, is a buy. That's why the Dow went up all the way. So you see that? So the thing is, all these pre-planned stuff, which at 7 a.m. or 6 a.m., you can actually prepare. And if you follow through and wait for the market to develop, then that's where you get it. So let's see the first one here. The market basically went below the pivot 1 and CCYR, price goes down. So until KTR -3, look at it. The market really hit KTR -3, stabilized over there. And of course, later on, the KSI flip color from red to yellow, red to green means the boys are buying. And after that, immediately the market shoot all the way up the sell. So all these things tells you that very important that you must do what you're supposed to do. So yesterday when the Dow Jones came down, right, I did remind some of you guys to buy back some of the position because it hit the KTR -3 level. So this system of ours really can tell you what to do, and you just need to follow because all this level, all the KTRs and pivots, the numbers are there at 6 a.m. in the morning, and this movement came in at probably 10 p.m. Right, so at 10 p.m. we already know what to do. Because from 6 a.m. we already know that what number is there, and the number is 32,095. So you realize that, right? This number, when it came down, the Dow Jones has hanged around there for quite a while, then it shoot up. So all this is very important information that only our system can tell you what to do. All right, cool. All right, so that is what happened to the Dow Jones yesterday. So let's go live right now to the Dow Jones now today and do the TA side of the market. Okay, here we go. All right, so this is my Dow Jones chart, the conventional, and you can see beautiful, man. Yesterday, I already tell you guys that is a MA30 that is waiting to be a buying opportunity. So what happened is that you can see initially the market broke below the MA30, so there was some selling. But I keep on reminding you guys, if the market stabilize and hold above the MA30, the market will go up. And indeed, that's why the Dow Jones hit 32,238, the Dow went up. So that is very important. The MA30 is going to be very critical. Okay, so now it went up, right? So what's next? The next thing is the Dow has to stay above today's MA30. So today's MA30 is actually at about 32,000. 292. Now, someone did ask me this question, Cal. The MA30 will move together with the current price because this is a moving average. So that means that if the market goes up and down, the MA also moves together, right? So which is the right number? So very simple, guys. Usually in the morning, like right now, right, about 9 a.m., if a good number, just put a number there. It won't move too much unless it's a very big movement. So this is an average of 30 days, all right? So obviously it's all right. This number now is pretty okay. So what I look at the chart right now, right, it basically tells me three things. Number one, it is a rebound at MA30, so the bullishness is there. It could be basically a bear trap. Number two is that, right, we still see a resistance and the technical line that I draw. Number three now is that if the market stays above OP, then the bullishness should continue, because previously, every time when the market stay above the MA30, the market will stay above the opening price. But now at the moment, we can see the Dow is pulling off from the high. So I will give my the Dow here as well. Now, I will say this upfront here today, if the Dow to come down, if it goes to 32,292, it'll be another good point to buy back some short position. But if you think that it will go below and close below, then that is, you can take a punt on this. Now, today is Friday, so I'm going to warn you this. Usually the last 1 hour, there'll be volatility in the market. Now, the last 10 times, at least the last 7 times, the Dow Jones last 1 hour, they pump it up. But so there's 3 occasions, they pump it down all the way, all right, to get it down on Monday. So if you want to take a punt on this, you can wake up at 3 a.m. to look at this trade, okay? So anyway, I can tell you this, 32,922, 32,292 will be a level to watch out for the Dow Jones today, all right? So traders, stand by for this, okay? All right, now it's 9:11. Still got 3 more minutes for Hang Seng sharing. This is the long-term two chart. So basically, okay, I did mention to you guys, you take this point A and B. If you divide by 2, you get the midpoint, right? You get about 32,400. So the market actually stabilized there. So at the moment now, as I mentioned, the 5% level is 31,572. That is the 5% mark from the all-time high level here. So pretty simple. If the Dow Jones really do come back down, right, this level will be a very good time to buy back your Dow Jones for temporary basis, because the Dow have been pretty positive, right? Every time we hit the 5% mark, the market do actually come back down, okay? Yes, of course. This Andrew, we need to look at MLP also for today. Let me just go back in. Yep, the MLP for today. Okay, let me just draw for you. The MLP for today is somewhere around here. Okay, that is about 32,560 level. That's MLP level. Yeah. Okay, sometimes I get carried away, so you guys can just verify with me anything else. Okay, cool. All right, so for the long-term chart, basically nothing have changed. It's the weekly chart. The weekly chart looks a little bit weak, but it depends on the closing. The closing is above the opening price of the week itself, still okay. But if the closing is below, then traders be careful already, all right? Be careful. So to the low of last week was 32,533. I'm going to write it down for you. The low of last week is 32,533. So if the Dow Jones do close below 32,533 for today, end of today, then must be careful for next week already. Yeah. If the Dow Jones can stay above this, still okay. All right. So 32,533 for the weekly chart today has to stay above it. All right. If you stay above it, all is good. Okay. No worries, Andrew. Yeah. You can ask me any question, you guys. Okay, so Hang Seng going to start very soon. Now, this is my longer term chart. I'm going to give it a miss right now. Let's talk about Hang Seng right first. Okay, so Hang Seng yesterday recovered, right? After it came down 250 points and it staged a very strong recovery up. So today for Hang Seng, likely, obviously, it will gap up first, a bit of gap up this morning because of the Dow Jones closing. That's first thing first. Second of all, right, I think the saga on the vaccination should be a bit over. All right, so should be all right. So for today, but still the Hang Seng is below the MA30, so it's still a bit far-fetched. So if there's any softness in the market, right, watch the opening price. If the market opens and goes down, then I believe there'll be some selling again. Okay, so watch out for that. Hang Seng going to start trading in about 35 seconds time. I'm going to go right now to our chart to stand by. Okay, Hang Seng, day chart. Okay, let's stand by for Hang Seng. Okay, there is a TSCB level at 28,316. There is a TSCB level there. So this is going to be a strong resistance for the Hang Seng at 28,316. Okay, Hang Seng will open soon. Now, Hang Seng has opened. Yes. Oh, okay. Hang Seng has opened slightly above yesterday's closing. So that means that there is in strong buying at the moment now. So of course, the KSI yesterday is red in color. Hence, therefore, I repeat, if the Hang Seng goes below opening price, there might be some selling. But of course, the thing is this, today Hang Seng is above pivot 1. So above OP, you can buy. Okay, above OP, you can buy. But because the KSI is red, so if we go to KTR +1 to +3, you must consider to book some profit. Okay, and if you're going to short from the market, be careful because it's above pivot 1. So there will be some, some resistance at the moment. Okay, so traders, just take note of that. Okay, be careful on this. So that is the first thing that I want to mention to you about the Hang Seng. So later on, I'll come back here to take a look. Okay, later on. Okay, let's continue. All right, so basically that is the Hang Seng. So look at Nasdaq right now. We bump into Nasdaq. Now this is a Nasdaq chart, and I don't like the chart. I repeat, I don't like. Yeah, I don't like because you see. Now the thing is this: we saw very clearly there was a very strong resistance at 61.8. There is the point whereby the market goes below the 50% mark, and then now you can see the Hang Seng, the Nasdaq now failed to close above the 38.2. So basically, it's very clear right now that if you do the MLP for today on the Nasdaq, it's going to be so tight, it's tight squeeze there. Yesterday it was a very nice, beautiful doji. So when it's a doji day, the next day could be a directional day. So unless the market today goes up, then fine. Now, if the market doesn't go up itself, right, and it stay below 38.2, it's going to be inviting trouble because if that's the case itself, right, I'm going to say up front here, there is a high possibility for the Nasdaq to drop down to 12,609 level. That is the 23.6%. Now, do note that Fibonacci is not inside the TWB system, but I'm using it as a conventional gauge so that you can compare this with our TWB system, and then you can get the best of it. Now, the whole point of using conventional chart here is because I know some of you guys are still having a little bit difficulty to adjust yourself to use the TWB system completely. So you still want to have something conventional to just feel a bit comfortable, right? So that's why I'm doing this. If you ask me, I wouldn't want to use conventional, honestly. I will just strictly use the TWB system chart. But of course, I have to ensure that you guys can get the G's, the best out of it. That's why I'm doing all this. So for Nasdaq itself, right, today, I will say this, I'm not comfortable. The buying yesterday, although it came in strongly at the bottom, it came in because there was a follow. Basically, it was just following the Dow Jones. So if the Nasdaq do come down today and goes below OP, I stick to say that the Nasdaq do have a probability of going to 12,609 level. Okay, that's the Nasdaq. All right, so the Nasdaq MA is coming down quite fast. The MA 200 is also trying to converge it. So now we have a compression right here. So very simple. If there's a compression, that means that there'll be a bigger movement coming in. So obviously, it depends which side the market choose, right? If we choose to go higher, then of course we may see the Nasdaq go to all-time high level. If it's not, it's all right. If the market breaches the MA 200, then of course the warning bell will start to ring. All right. So traders, you just have to be very careful on this point. Okay. All right. So that is the Nasdaq. We look at the Hang Seng right now live. Hang Seng is now moving a bit higher. Okay, let me just bring in the chart right now. Hang Seng, the 5-minute. It has basically up by 100 points from yesterday's closing. Because as I say, the day chart is above OP, a bit pivot 1. So you do see upside at this moment right now. Those are the technical levels to watch out for. So all these technical levels are already made available for you. So as a trader, you just wait for it to happen. Then you trade according to rules, okay? So let's bring Nasdaq in first. Nasdaq. Here we go. Oh, I didn't do Dow Jones. Sorry. Okay, so let me do the Dow Jones first. Sorry, apology. Okay, so this is the Dow Jones chart. All right, this is the Dow Jones chart for today. All right. Now the Dow Jones chart, you can see pretty clearly. Right, today opening price is actually above pivot 1. So it's supposed to be bullish, and the KSI is supposed to be green in color. So above OP is actually a buy. Above OP is actually a buy. But now the Dow Jones is trading below opening price. So maybe is it too early now? I don't know, right? But all I can tell you is this, okay? If the Dow Jones cannot stay above OP, you cannot go for buy. That's it. Simple as that. Unless later on it drop to KTR -1 to -3 level, then you can look for buying opportunity, all right? At the moment now, if the Dow stay below OP, then there is a possibility for the Dow Jones to test back again this 32,378 KCB point. Now you can see that last 2 days, if you actually, last 3 days in fact, the last 3 days, if you buy at 32,378, right, you will basically make money all the way. Very cool. Every time it comes down, it recover. Every time it comes down, recover. So yesterday was a very big one. So 32,378 will be a very powerful technical level to watch out for the Dow Jones. So as long as the Dow Jones can stay above it, that's fine. If the Dow Jones trigger it and recover, it's a good buy. But if the Dow Jones go below it, then of course traders, you need to be very, very careful. Okay, so you got all the hints on what you can do for the Dow Jones. You just have to follow through 32,378 level. Okay, all these are very important technical level that you cannot give it a miss. Okay. All right, let's look at the Nasdaq right now. Apology earlier. Now, Nasdaq today also have a very interesting stuff to share with you. The Nasdaq today opening price is also marginally above pivot 1. So jolly well above OP is a buy. But the difference is that the KSI is red in color. So this, you can see the difference there. The KSI is green in color, the market generally goes up. If the KSI is red in color, generally the market, look at it, the tail, the top of the candle, most of it, right, there's a tail and the price came down. Because when the KSI is red, it's representing bearishness, okay? And that is the reason why you need to be careful on the buy side. So of course, yesterday when the Nasdaq came down, it hit the KCB level at 12,654. And you can see that it almost perfectly bought the bottom. Once it hit the KCB level, it rebounded strongly up by about 160 points. That's why yesterday, I think MTrader bought around there. All right. But because the KSI is red in color, right? So jolly well to say this up front. If the market later on breach below pivot 1, then there might be some selling back to this point here. So for the Nasdaq, I will say up front, if the Nasdaq breaches 12,788 level, there is a possibility to Nasdaq to see back to 12,654 level. Okay, so this is again things that you must take note of that for to trade with the Nasdaq today. So Nasdaq is more towards the sell side if it goes below the pivot 1 level. Okay, this is very, very important information that you need to take note. Now, I'm going to be on Smp today just to show you Smp chart because you can see now I use the conventional chart to extend and extrapolate the uptrend, and obviously I do the downtrend. Okay, to do this so-called triangle. Now you look at triangle. Now if you look at the bigger picture, you can see that the triangle was breached the 2 days ago. Yesterday it tries to stay above it, but today the moving average is very close by now. The moving average here now is about 390. All right, 3903. Okay, to be precise, 3903. So all I can say is if the Nasdaq S&P 500 stay above 3903, then okay, the upside is still possible to be there. All right, but now because it got resisted at my trend line, you can see very clearly, then I will say that 3903 cannot be breached. If 3903 bridges, then of course there might be selling. Okay, I repeat, because now you can see that it's actually happening. I know that by saying this now to tell people that you say that KL, you should be calling for buy from the bottom. I will call for buy the bottom when the time is right. But with the 10-year yields at this moment now, right, I cannot see why should I be calling for a buy at this dangerous time. Okay, I mean seriously, this is dangerous time. I'm telling you this because you think about this. The 10-year yields basically was the one that motivated the selling recently. Suddenly, it just came out on its own, right? No reason for that. Then after that, the market still come down. So think about this. What if the yields start to go up again? Then what will happen to the stock market? It will get hit. And this time, the hit will be even bigger than the previous one. And that's why I'm expressing my concern right now, okay? All right, so that is the point on S&P 500. All right, so let's look at, DAX, right? You guys want to see DAX? Okay, let me review DAX. Now, DAX yesterday did a ridiculous power recovery towards the end, right? You can see that, wow, the DAX misses the MA30 by just a few points and then went all the way up, break past the BNB SL level and breach by technical point. So DAX seems that it may want to test again a high, but you know yesterday DAX was the main driver. Yeah, so I mean, I strongly believe there was some money pumped in the system once again. So it is a BNB, so I must follow the BNB rule. I will choose the new BNB right now, which is this one, the RL and SL. So this is a DAX for you guys, the resistance and support for today for DAX traders, okay? Okay, so let's look at gold. Now, this is gold. Wow, look at it. Gold yesterday came down all the way down to about 9 p.m. Singapore time. Then after that, itself, right? Okay, 9 p.m. Okay, I'll do Smp for you, Leon. All right, you can see that, yeah, the gold came down all the way to about 9 p.m. Then suddenly there was a sudden upsurge, all right? I believe that was because some news came out, right? And then after that, I think, yeah, correct, the news came out, the unemployment insurance. And after that, the gold went all the way up. Now, a friend of mine quickly called me, Cal, is it time to buy gold? I say, what's the price now? He said 1740. I say, no. And obviously, we had a little bit of argument over there. I told him that, look, brother, the gold is still a downtrend. And you want to buy when it's rising, it's going to be suicidal. So obviously, the ding dong was a little bit long because I was playing football. And by the time it came back, it was trading about probably 1738, 39. And he was telling me he bought gold already. So I told him, say, brother, just be careful. If the gold broke below 1735 level, you have to cut your losses. And before that, by the time I reached home itself, gold came down all the way to about 1723 level is where he cut his position. Now, why he cut there? It's a very typical thing, guys. This is what I've been telling you guys, don't do that. You see, let me explain this to you through this chart, okay? So if you want to buy something, you buy it here and your stop loss put here. So this is your entry and this is your risk. It's all about risk management. If you enter at a good price, right, whether it go up or down, that's another thing. But when you enter the price at the good, when it's recovering, right, and you think to buy, you buy here, okay, just make sure that your stop loss is somewhere here. So if you win, it can go up to many folds, right? But if you lose, you only lose whatever you're risking. So what happened is that he did not buy at this lower point. He bought somewhere near here. Okay, he bought somewhere near here, about 1739 level. Okay, because you're expecting 1752. Then after that, I told him the thing is that if the market breached 1735, the market may actually go down lower. So what happened is that, when I finished my football, it was around here. He told me, Kel, it seemed that there's some resistance. I told him that is why, because only when you, in the bear market, right, usually you will see such things. So after that, what happened? He said, okay, he will take my advice as 1735 to cut loss. So obviously, when the market broke down, I asked him, have you stopped out? He said, no. He has placed back here. Oh gosh. He has placed back to where the low end is. Now, I'm telling you this, guy, to put at the low end is really suicidal because I tell you, if I'm a short seller, I will bring it all the way down to the point that you will place a stop loss. You must understand this, my friends. When you are in a bull market, the market will not visit the previous low usually. But when in a bear market, right, that will be opposite. It will go down to the previous low regularly. So you must understand that you cannot use the same technique on a bull market and expect you to work the same thing on the bear market. It's totally wrong, okay? So if you understand what I just say, please key number 1 right now to let me know whether are you still with me. If you know exactly what I just say about here itself, right? All right, please key number 1 so that I can see that you guys understand, okay? If you don't understand what I just said, right, you can just ask me, okay? All right, thank you, Carl, Michael, Brother Wilson, Jeremy, thank you, Luis, Fred, Philip, Eddie, Anthony, Susan also. All right, so that is point. That's why it is very important that you must understand you cannot use the same thing and apply on 2 different type of market condition. It doesn't really work, really. Okay, so okay, Chongming, thank you. So that's why. Unfortunately, he lost money. So he asked me, what can he do now? I say, wait on, guys, just wait on. Don't need to run in the market, okay? So now they are telling you that because the dollar is firming, which I told you 3 days ago, that's why the gold is coming down. You see that? 2 days ago, the day you go can buy. Then just the day before, said that gold will definitely go up. And now he's telling you this because the dollar goes up, that's why the gold comes down. This is all the BS in the market. So you have to make your own effort, your own conscientious effort to basically look at the charts, okay? and also understand the fundamental of the macro economy. Then it will work, okay? All right, before we go to S&P, let's finish up gold first, okay? Shall we? Now, yesterday, gold opened between the two pivot, all right? So because the KSI was green in color, okay, and there was no blue bar at the bottom, so very clearly, if the market goes above OP, generally speaking, it will go to 1738. So yesterday, the opening price of 1734, so going to 1738 was kind of expected. Then, of course, if it goes above P1, you can stick for buy. No problem, stick to buy. But once the market goes below the pivot 1, that means it loses the reason to buy. Then, obviously, it may be going down to the pivot 2, because the pivot 1 and pivot 2 is so near each other, and obviously it happened. Now, what is insane is that, look at it, the pivot 2 level was 1721. Now, this number is available at 6 a.m. in the morning, right? 6 a.m. in the morning. You already know 1721, this number actually exists. It's like buying 4D. You already know this number exists before the draw. And look how crazy is this. You know what I love this indicator of mine is that, look at it. Look at it, 1721 was here. And look at the low of the day. Now, this is at 6 a.m., my friends. 6 a.m., we will know this thing called 1738. We also know this thing at 1721. And look at it. When the market goes from here, where it bottom up and goes up, right, it went to 1738 first. But once it failed to stay above KTR plus 1, because the market is weak, and look at it now. Wow, look at it with the way it came down. Look at it. The way it came down, the moment it hit 1721, the market just stopped there and recovered almost $7 from the low. Oh my goodness. I mean, seriously, this is why I love the TWB system. You really know what to do, but you must trust it. And the trust is not about just say that, okay, I trust you come down, I trust you go up. No, the trust is that when it happens, you can react after that. TWB system is not about predicting, it's about following through the boys. That's why it's follow the boys system, okay? We trade with the boys. So that means that when the market, if you want to buy into this and we saw the price coming down and trigger 1721, you know that, right? There is a probability the market is going to bottom out around here itself. And truth be told, it really, really happened. This is really incredible, right? This is really insane, I tell you that. Okay, so let's go to the market right now as you wanted. Let me bring it in. Okay, so let's go and take a look right now. S&P 500 first, okay, as you wanted. Okay, here we go. Now the S&P 500 for today, the opening price is actually above the pivot 1. So same thing, if opening price of pivot 1, then obviously above OP will be a buy. But because the KSI is red in color, and of course the KSI rate is a little bit higher than yesterday, I'm going to give my personal take is if the KSI, if the S&P fail to stay above pivot 1 today, then there'll be some selling, okay? Only if it bridges 3907. Only if the S&P break below 3907, then there'll be selling towards probably the next KCB level at 3878. Okay? If not itself, right, then by right, the S&P is a buy today, small buy because of the KSI is red in color, okay? But if the S&P do break below 3907, then of course the selling will come in. Now, from the way I look at the market right now, I think today will be a very slow day in the beginning of the day. I believe that will be quite slow. So watch out for the market. Just go slow, relax a little bit, okay? All right, so that's the S&P 500. All right, so hope you like it. The one who requested it was Leon, okay? All right, looks like that's where it go right now. Now, this is gold chart, and you can see it's terrible, it's ugly, and it's below the MA again. And yesterday, you can see the market bridges the MA30 or gold and then came back down. So this tells you the MA30 is still so powerful, and today, the MLP and the MA30 is pretty near one another. So gold, in my opinion, could be trading lower today if the market loses the opening price. Now, where can it go? Well, based on it's a new BNB, right? So I'm going to change the BNB now to this point here. So we are very tight right now. You have a BNB, MLP, and this MA30 all so near each other. So all I can say is this: if gold is to come down, gold will test 1721. 1721 is a BNB SL, the support level right here. So if gold do come down, it may test 1721 first. Then after that, maybe it will stage a small rebound there. But if the market bridges 1721, then of course, selling is kind of expected, okay? 1721, okay? For gold conventional, okay? That's conventional. Now the weekly chart looks not so nice. The weekly chart show you clearly that it's going to be a black candle again. If the black candle engulf the white candle the previous week, then of course the next following week, based on usual pattern, they'll be selling the next week. So that's why for gold traders, it makes more sense to stay on the short side than the long side for now. Okay. All right, so this is the silver. Well, yesterday silver came down beautifully, and I told you silver will be down. And indeed, silver yesterday came down very fast and triggered $24.40. Remember, I told you, right, silver will come down lower and it will basically book below $25, and indeed really happened. So that is why it is very important to, follow your rules of engagement, and you can see that. So now you can see the MA30 and the MA200 may converge. Now, if we converge and the MA30 goes below the MA200, then things may get even much more problematic for traders. Okay, so traders on this one, you need to be very careful. Okay, you need to be very, very careful on the silver market. All right. Okay, so let's look at the gold market using our system right now. Okay, done in gold, sorry. Okay, so done in that. Okay. All right, so I've completed the gold sharing. Let's look at the Bitcoin. Now, yesterday, we know that I told you guys Bitcoin was pretty bad yesterday, Bitcoin, but still our Bitcoin strategy really pays off. Basically, you see the KCX and you look at CCRY, you trade. Dual tick means you can make as much as $500, single tick is about $300, and triple tick is at least $800. So yesterday there were 4 good trades based on the KCX, and of course one of them didn't turn out well, lost money, but the other 3 make money, and the money that we make is more than the losses, obviously. So that's why I say this, our Bitcoin strategy is really pretty decent. All right, it's not 100%, it's no way be 100%, but definitely you can make money out of it. And of course, our trading team yesterday also make money. Now, this is really done by real life traders, TWB students, really trained and selected to do this. Okay, trained and selected. And we already tested this for a week already. The result has been pretty reasonable. Not say a lot of winnings, but at least the losses have been kept pretty low end. In fact, our winnings is as about 80% around there. So that's why we are confident that we will be able to make more money later once Bitcoin has finished its recent selling. All right, let me bring you Bitcoin right now to understand this better. Okay, here we go. Now this is Bitcoin today. Now Bitcoin today is slightly above the pivot 1. So if it stays above the OP, generally that we are buying up. But there's a problem here. Can you see that? There's a TSCB level at 52,513. Now TSCB is only available for PTP student, but can show it to you. Now today the resistance for Bitcoin will be 52,513 level. Now which is already resisted this morning. So with the KSI red in color and the blue bars are there, I believe that traders, you need to be very careful. All right, so there is some form of resistance. Now, if Bitcoin today come down, the first target if we going for will be 50,894 because that is a pivot 1 level. Okay, so traders just stand by for this. I believe that Bitcoin may test back 50,894 later. Okay, likely it will test. Not 100%, just look at it. Let's see whether it really happened. Okay. All right. So I come to the end of the part 1 of today's MAO part 1. Part 2 is whereby we go into alternative market analysis, whereby it's more towards the bear side of the market. So some people don't like it, so they can actually choose to exit right now. If those want to stay on to listen to me further, you can hang on and continue, right, the session. Okay. Now the Hang Seng is trading higher now. Let's bring the Hang Seng in just to show you Hang Seng now. Okay, the Hang Seng is trading higher now. You can see that there's no color change, but it stays above the opening price. And I mentioned to you today, the opening price is above pivot 1. So as long as it's above pivot 1, Hang Seng should be going up, and really it's really happening as we are speaking right now. Okay, so you see whatever I say really start to manifest on its own. Okay, so traders just take note of that. Okay. Okay, guys, give me 5 seconds, drink some water, and we'll start. Okay, continue then. Now, this is something you must understand. I got this report from a very good buddy. So apparently this is a very important report that tells you that the record of FMS, okay, all the fund managers survey, say that, right, when they expect the economy to be doing very well. Now, every time where the fund managers are very positive, you can see that subsequently, not immediately, but subsequently, the market will actually taper off. So every time when the fund managers are very happy and they expect a stronger recovery in the economy, that is whereby usually the market will taper off. So you can see on the fund manager when they're expecting the profit margin to be good. You see that in February in 2002, they expected in December 09, and now they're also expecting the same figure. So when everybody is expecting goodness in the market, they'll tell you, okay, how they expect, and obviously retailers will jump in. Retailers will always jump in, and then what happens next? They'll get caught. This is something that has never changed, and it will never will. All right, this is something that we understand because we only buy things when we see people are buying and people are making money and so forth, right? So this is on Steve Henrich again yesterday, which is I think Colin have shared, right? So it shows you that, right, yesterday we have a huge inflows of money coming in. But at the same time itself, when a huge inflow comes in, right, they're actually liquidating from the bigger boys. So you can see that on the day before, you can see the S&P was going up itself, right? The so-called S&P going down, but the last hour, the selling momentum was there. So this tells you that it's a very simple transactional model. Someone says buy, and then someone came in to buy, the transaction will be that it will become the opposite to sell. So if someone want to buy, someone had to sell so that the transaction will go through, and that's how it works. So this is a very important thing whereby this is ISM, right? ISM is the purchasing market index, okay? So usually with the ISM indicator is above 60, right? That means there's a typical lead or week return in about 3 to 6 months time. That means the market usually will taper off. Because when the ISM is strong, means the economy is going there, and there'll be a repricing on growth and rates. And usually yields will not do well, and yields will have to go up. That's why I tell you yields will be going up very soon. And when the yields go up itself, right, obviously the bond price will come down, and then after that it will go in cycle, all right? So now what's happening is that, right, the stock, bonds, Bitcoin are all fighting for the same capital that is in the market. So now it's whether who will be the one that receives the most of it. Now, legendary investor Ray Dalio says that it's actually very likely the US will outlaw Bitcoin. Wow, this is actually quite a big one from him. But I will say this one thing here, right? Ray Dalio have been wrong quite a few times recently. So I cannot say that because end of the day, there's so many big boys involved right now. I don't really think that he will be correct, at least for next few years. Maybe later when the rampant of it go crazy, when everybody is nutcase over Bitcoin, no one's working, then maybe they'll be outlawed. All right, at the moment now, I don't think so, but definitely for sure itself, I'm informing you when ISM is 60, that is where the yields will usually follow in, okay? All right, this is the last chart for today. This is something that I don't know how much truth is there be, but it just say that some symmetrical thingy going on. Apparently, back in 2009, at the lowest point to the highest point before any significant pullback, the downside to the upside itself is about 77%. So the recent low to today, right, is also about 77%. So of course, this chart is saying that, right, maybe this is going to tell you there's a potential, history may repeat itself once again. So I don't know whether is it like that, but you make your own decision. Anyway, my job is to share with you. Okay, all right. So that's all for today's MAO. I hope you enjoyed this session. Once again, I appreciate you guys for all the support all this while, and I want you to make money from today's market. Remember this, follow the chart, follow the system. I'm sure you will do pretty well. Okay, guys, have a great day. Take care. Bye-bye.